So is NIO a buy under $5? Well, the technical suggests yes, it is. Why? Well, two things, three things, four things. Number one, prices are at a accumulation phase, right? Sub $5, price is selling at a huge discount relative to where price was at just several years ago when price was trading at $60. This is called the distribution phase. So that is number one. Number two, price is rounding out just like it did back in 2020 when price was rounding out. All right, number three, price has formed this ugly looking double, now triple bottom, which is still a bullish pattern formation. Back in 2020, price formed a W pattern, which is a bullish double bottom pattern, which sent price higher. Now, before I give you a couple more reasons why NIO is a buy under $5, let's get into this article. So NIO has always been an intriguing stock for investors looking to get exposure to the blossoming EV industry. The company has been a leading player in China's premium EV market, has championed battery swap technology, and has posted months of sustained and strong delivery figures. But with the stock down roughly 85% over the past 3 years to well below $5, is it a buy for 2025? Now, the dollar value of any stock trades at is far less important than the figure's context, meaning the valuation. While $5 a share might sound cheap, whether it's a bargain or not depends on how much revenue and earnings the company is churning out. As NIO trades at a much cheaper price to sales ratio than its competitors, this under $5 stock looks more like a bargain than you might have originally thought. If NIO's price to sales ratio rose to more closely match its peers, that would amount to a generous gain in its price target. For NIO to close the valuation gap with some of its EV rivals, the company will need to show investors their growth to be had. The good news is that NIO should be setting itself up for sustainable growth this year with production deliveries of two new models, Firefly and Onvo, accelerating throughout the year. Now, after posting many months of fairly consistent deliveries in the range of 20,000 to 21.5, December offered a sneak peek at what growth in 2025 could look like. Fresh deliveries of its Onvo model drove NIO's deliveries above the 30,000 unit mark to a monthly record. Now, NIO has set itself up for a strong 2025. While the company's bottom line losses might expand before it pivots towards turning a profit, it's also true that management is aiming to reach the break-even point as soon as next year. The Chinese EV maker is also well positioned to deliver top-line growth that could induce the market to narrow its valuation gap with competitors, providing significant upside to shareholders. So, is NIO a buy from a fundamental standpoint? The article suggested yes from an evaluation standpoint, as it is trading below its peers in terms of price to sales. Now, let's zoom down to the weekly chart. And I know it looks ugly. I know. But as price formed this triple bottom, double bottom, W pattern, it did form a weekly buy level. How? You had this rally down, basing candles, and look at that extended range green candle, up, up, and away to this key support, now resistance band at $7. Now, price is and has pulled back. Why? Well, there are buyers that want to get their orders filled, right? On this move higher, unfilled orders were left behind. And now, if we scroll down to the daily chart, you can see how price formed a box within a range. And now price is finally dipping back into that level. Question is, or hopefully we answered the question, is NIO buy under $5? Again, the chart suggests it is a buy. The fundamentals suggest it is a buy. Thanks for watching. Subscribe. Please like the video.